Patty? I'm sorry. Any further discussion on the approval of the minutes? If not, all those in favor? Anyone opposed? Okay, we're moving right along. Now we'll move into our discussion and approval of the continuum labs examination. We'd like to invite Mike and Tricia. Good morning.
Good morning.
At the last meeting, you had received a draft of the examination of continuum labs that has been performed by Clifton Larson Allen. Today is a continuation of that discussion. I've asked Mike and Tricia to come back not only for that discussion, but also the audit that occurred at the last meeting. So at this time, we will allow them to continue with their presentation, and Mike, we'll just turn it over to you at this point.
Actually, we went into a very detailed presentation last time, and I thought we were just going to come back today and answer questions that you might have.
We can do that. I also had put in your packet a management response that was prepared from my perspective and also Mr. Bond's perspective relative to the examination. If any of you have questions related to that at this point in time, we can discuss those first. I can tell you that Mike and I have not totally agreed on all of the points there, but I haven't seen anything that's extremely contentious. There are some differences, and we will certainly try to recognize those as we go through the discussion.
Phil, do you want to walk us through a little bit on the actual management response? Maybe just hit the highlights for us on some of the points that were worked out, and then we'll get into any discussion or responses from Mr. Carter.
I just wanted to first of all, why would an examination be a draft?
Excuse me?
Why would this be a draft? I mean, is an examination or an audit something you do, and this, why is it called a draft?
It's a draft because it's not final.
Okay, do we know when it will be final?
You'll get final as soon as you approve the draft, and we get a management letter signed. I mean, a management representation letter signed.
Okay.
Donald, the real issues at hand is that the scope of the examination determined from their perspective that there were some questions, expenditures, costs in the project. Those were identified. Remember that the full amount of money has to be projected over the full amount of the project because they only looked at 42% of the money that was spent. So we've taken those numbers and produced an estimate of projected costs, and the board has these categories to determine whether or not the expenditures were appropriate or if they have been in fact substituted for other expenditures that occurred in the project. Is that clear?
Yeah, I understand all that, I just didn't understand. I mean, we get, now when you do our audits, which we're gonna go over today, do you do those as a draft also?
We did yours in draft form also.
Okay.
I mean, it's generally up to whatever board we're presenting to. Some boards prefer to have a draft so they can approve it before we issue finals, and some boards want finals, so it's really a choice.
Well, it looks to me like, if I'm not there, but I mean, you're gonna have to be, I mean, it's hard for me to understand this stuff. You're gonna have to be patient with me where I can try to understand this stuff. And I've been thinking a lot about this thing, and it looks to me like the biggest problem that we need to try to address is the contract. How did we get a contract like this? I mean, I don't even know who wrote the contract, whether it's one person, two persons, three people, or a team of people, or whatever. I've never really understood who wrote this contract, because to me, contracts for the Hardy County citizens should favor the Hardy County citizens, not the recipient of the grant. It should be fair, of course, but to me, the people's money needs to be protected first. And
Donald, if I can ask you to clarify, are you referring to the contract with Continuum Labs? So I'm a little bit confused as to what the question is directed toward Mike and Tricia.
well, I understood from Bill saying that he would answer questions about the examination and also the response. Was I wrong?
I can answer those questions. I don't have any trouble with that.
I'd like to know, because reading the first paragraph of your response seems to be like there's a lot of confusion about what this grant, the contract really said. I mean, apparently, we looked at it one way and you looked at it another way. And so, what I'm wondering, Mike, is how many agreed on procedures did you do prior to this examination for this continuing project?
We were just in an information gathering mode before it became an examination.
Okay, you never did one before that?
No.
In the past years for either LifeSync or Continuum, you never did an agreed on procedures for us?
No, this was the first.
This is the very first one. Oh, okay. So I was wondering, I thought we had done some in the past.
We were engaged by the board to do a monitoring of Rapid Systems the year
But I'm not
before.
talking about Rapid Systems.
But this is the only engagement we've had related to Continuum.
Okay, well, this board agreed to do an agreed on procedures thing.
Examination, yes.
No, we never voted to do an examination.
Okay.
We voted to do an agreed on procedures. And all of a sudden, what made this, how did this thing get turned from an agreed on procedures to an examination all of a sudden?
Well, I thought we actually already discussed that at least 2 meetings and beyond, that the original scope of the project was going to be the agreed upon procedures, where they were going to be reviewing the project according to the contract that we had outlined. When they went back to review in their own internal processes, I believe that's when the recommendation came back that you were not able to do the engagement as agreed upon procedures, and that's when we moved into examination. Am I recalling that correctly?
It was much more than a recommendation by the people that approved us going forward with an engagement, said we cannot do agreed upon procedures in this instance, because agreed upon procedures, we cannot deviate from what you tell us you want us to look at. And in this case, things kept coming up. It just would not have worked. An examination is actually a lot more comprehensive than agreed upon procedures engagement.
Yeah, I understand that one. But I thought that in the past, you had done an agreed on procedures for us in the past. Okay, because where I was trying to go with this is that if you had done that, and apparently you didn't, why didn't you catch this back then? So you didn't do it, so there was no way you could have caught this.
Actually, no, I mean, that's why that was the first observation we made related to the contract. We had, we wanted to make it clear that the contract itself was vague, and we didn't go into a lot of detail because the Auditor General and their operational audit had already gone into a lot of detail about that being a vague contract.
Okay, well, can you explain to me the meaning of the first paragraph of Bill's letter, the management letter?
I didn't write it. I can't put words in Bill's mouth, so.
Well, so then that's kind of what I was asking Bill to do, is go through and hit the highlights of his response. So
And then,
You know,
we're gonna
perhaps-
come back and ask questions after the total is.
Well, I mean, we can address them as we go, we can come back in totality, but, you know, that's why I kind of wanted Bill to give an explanation
Okay.
for his
Okay.
responses, and then if we want to have Mike and Tricia address those, or work through those as we go, or at the end, it's up to the purview of the board.
Sure.
Maybe we can reconstruct, some of the things that occurred with the grant, Donald. Maybe it'd be a better way to walk through this. And I'm gonna do this from memory, not from the document, but if you recall, the original presentation was done by LifeSync. And the principals of LifeSync were awarded a grant in this room 3 years ago, over 3 years ago. And there was actually several different meetings related to that particular grant, and that they made a presentation first. And then the board came back and ranked the applicants for funding. And then we had asked for time to come back to the board with a contract that represented what we believed was a reasonable agreement between the two parties. We took the minutes from the meetings and the discussion from the meetings and prepared a grant and brought it back to the board. That was the original LifeSync contract. And it was based on a draw schedule that had predetermined amounts of money that would be dispersed on a monthly basis to the project. That sometime in the middle of that year, it became obvious that it would be much better for the contract to be continued or developed by Continuum Labs. So we began working on an assignment and modification agreement. The assignment and modification agreement produced some changes in the original LifeSync contract because at that particular point in time, we were going through an operational audit. We had the benefit of discussing the contract deficiencies relative to the Auditor General's perspective. So we created an assignment and modification agreement that was eventually assumed by Continuum Labs. Does that sound right? So, but the original LifeSync agreement remained intact for the project, but then the modifications of that agreement were also applied to Continuum Labs. The thing that changed most dramatically between LifeSync and the Continuum agreement was the difference in how the draws were made. There was some dissension on the board at the time as to what latitude they should be given to receive their money. And at the end, we chose to appropriate the full remaining amount of money to Continuum Labs, but it was predicated on a monthly presentation. And those did occur sequentially for the next 14 months or 15 months. Through that period of time, the balance of the $7.25 million was dispersed to Continuum Labs. The last disbursement occurred in January of 2014. Continuum Labs has continued to operate since January of 2014 without any additional money from Hardee County. And there's a couple of things from my perspective the board needs to consider. When the examination occurred, Clifton Larson Allen does not recognize underbillings. I used one of the things Mike and I had disagreed on, and I had already sent this before, and I conceded that I had said disallowed. It's not their prerogative to disallow an expenditure. It is this board's prerogative to do that. They do not take into consideration underbillings for various reasons, but they don't count. We believe that those underbillings did occur. We believe they can be verified that they did occur. They were legitimately spent on the project. So part of the issue you have to consider today is if those underbillings were legitimate, can they be recognized to offset the also valid overbillings that occurred as a result of the examination? Then the next part to consider relative to the entire grant is the validity of the money above the $7.25 million that the principals of Continuum Lab have put into the project. And Clifton Larson Allen is also here today to verify an amount of money. It depends on the period of time that you want to look at. Some believe that as of January 30th, 2014, at the point of the last draw, that there should be a fantastic company intact operating in Hardee County. That was not the case. I don't think it was ever the intention for that to occur. We had an extension of the contract to June 30th, 2014. If you want to look at June 30th, 2014, there was an additional amount of money put into the company by the principals of Continuum Labs. Or if you want to continue looking at the development of the company, you can also go to the end of the fourth quarter of last year and look at that amount of money. All of those are options for the board to consider. I'm not certain when we should decide whether or not there has been true performance under this contract. The business is still viable. It has great potential to be a long-term job creator in Hardee County, and those are issues that the board has to decide how they feel about. And that's mostly why we're here today. If we can resolve those differences or come to some agreement, then we will be able to move on.
Any follow-up questions, Donald?
Well, are we going through this, or is that his presentation?
I think does that complete your summary?
I think the most appropriate way to go through this is to start back with the question calls findings and take them one by one, item by item, and let the board decide how you want to deal with them. If you want to deal with them all at one time, great. If you want to take them one at a time, we'll take them one at a time. It's up to you.
Well, anybody else want to start?
We might as well go one at a time.
Hey, Mike, you want to walk us through the findings and just have open discussion and see if we can reconcile?
Could I offer a suggestion? Sure. Could we talk about the question costs that are in similar groupings instead of going one by one, because there's probably 30 pages of individual findings?
That's fine.
Chrissy, do you still have our slideshow from last month? Yeah. You could pull it up and have slide 40, yes, it's second to last. Second to last slide.
I'm just wondering while they're waiting, Bill, and it says in here that the draw requests are just estimates. And I was wondering, since the draw request that they requested each first of the month was for the previous month, why wouldn't they know what that was? Because of the receipts and the timesheets and all that, they would know exactly what it was.
Some items they would be able to predict fairly closely what they were, but you have to understand that this was a company that was ramping up. They were creating contracts or contracting for services with other companies, and the amount each month did change. That was the purpose of some of the philosophy from the board was to do this as a draw grant rather than a reimbursement grant. We did eventually, after the first 3 or 4 months, manage to get it closer to a pure draw reimbursement-based grant. But for the most part, those draw requests cannot be taken as the gospel. They are not exactly right. That was the purpose of the examination at the end of the project. And that's why we're here today, is to reconcile the differences between the draw requests, which were projections of expenditures, and actual expenditures.
Well, how did it get to the point where I guess this board determined that this was a reimbursement grant and not a monthly expenditure grant?
The contract specifically says that it will be based on draw requests. And it's easy for a person to say that a draw request is a draw based on actual reimbursement, or a draw is based on estimates of expenses. I know from working with Mr. Bond through this project that the initial requests had to be estimates because he could not predict the ramp-up costs of the company. It was hard to do. As we moved through it, I think probably by February they became fairly close. However, some of his overhead computations as it relates to payroll and contractors were overestimated because he used a spreadsheet flat rate computation. We know that, we've identified that, and that is the basis for probably a lot of the next part of the discussion. Thank you, sir.
Or wouldn't his CPA know this? What, that this was going on, the over percentages and these other things? And wouldn't his CPA know to keep records and stuff? Receipts and records and stuff that's supposedly missing, that we're supposed to take his word for, that it was spent where it was said it was spent.
I don't know that I've interpreted that they said that there's not receipts or records.
Oh, okay.
I mean, is that your interpretation? I know that.
No, we actually received the detail of what made up the actual overhead, and we tested a good portion of that schedule. And while there were, we can get into more detail on this, there were some underbillings. We had a difference on the amount. We found during our testing of that schedule that there were items that were duplicated, that were charged actual expenses, that were also included on the overhead schedule that we received. And there were some items that looked to be not business in nature. So we came up with, based on our testing, a comparison of the overhead rate for general compared to that 15%. And we have a pretty detailed spreadsheet of that testing too. And we found that the majority of the underbillings occurred in October. I think the 4 months that we tested, there was about $77,000 of underbillings if you took that detail compared to the 15% of salaries. Of that 77,000, I think about 64,000 of that occurred in October, and about 12 or 13,000 occurred in the other 3 months that we tested. And of the other 3 months, 2 months were slightly under, and one month was slightly overbilled.
Now that $77,000, that's just for the months you tested. That's not the complete contract.
No, but that's underbilling. So that's Mr. Bond incurring more expenses than was what that 15% of overhead burden was. So, but that, like I said, of the 77,000, about 64,000 of it related to October, and then the remainder related to the other 3 months we tested.
So Mr. Carter, I just wanted to ask my own clarification on the underbillings. Is there a philosophical reason that we didn't test underbillings, or was it primarily that you were just trying to match the testing to the draw amount, and so you didn't go beyond that?
Well, there was 2 reasons. The first one is in our engagement letter, the scope, what our understanding and what you signed, the scope of our engagement was that we will examine your support for draw schedules for the period under contract. The objective of our examination is expression of opinion about whether the draw request submitted for reimbursement within Continuum Labs is stated fairly in all material respects based on the original contract and subsequent assigned modification agreement. So scope of this was to test the draw schedules and make sure there was support for the amount on the draw schedules. That was in the engagement letter, and that's what you signed, and that's what you approved.
But it does say that the draw request submitted for reimbursement, and we know that that was not the case throughout the entire contract. Some months were validly looked at as reimbursement, the early months were not.
The early months, and then we went into a lot of detail in our observation findings that, yeah, the early months were advances, and then we tested October, and then we tested January, and starting in January, it was based on December actuals, based on what we saw, and then the other 3 months that we tested, after that, were also based on actual expenses incurred the previous month.
So was this one of those terminology differences where, you're calling something a draw and you're calling it reimbursement, or was it a misunderstanding, or is this part of the auditing procedure?
We were attempting to find that there was support for the expenditures that were incurred and were put on the draw schedule. I don't know how you go about testing total estimates unless you do 100% compare the total to what was paid.
But we didn't do 100% because we didn't look at underbillings.
We did look at the underbillings for the months that we tested. There is a schedule that we have that we received from Mr. Bond that details out all those overhead amounts that he said incurred that were supposed to be covered by the 15%. Pull that up. In October, after we tested the total amount, and like I said, our numbers differ from Mr. Bond's because there were some duplications in there. There were items that we tested that were also included as direct expenses. But after adjusting for that, we found that in October there was 40% of the salaries were represented by overhead expenses, and we only charged 15%. So that was $64,930 difference under billing. And if you look at the cost that we questioned, there were also $44,000 of overbillings from what we tested. So if you want to net those two out, it's about $20,000 of net underbillings.
Okay, so if we were to look back at this summary of question cost, where would we apply the underbillings to the summary of which of those areas?
The first one, since October was kind of a strange month, it was an estimate that CLI was ramping up. I would say that October should be a standalone and not projected to the population. And you should offset the $44,711 up there.
So you're saying the 44,711 is a one-time, not projectable amount?
Right.
Did you say you're gonna leave out the first $355,000 that was paid in October?
We actually, Mr. Bond gave us a revised detail of the actual expenses that were incurred during that period, and we tested that. So we did test, it came out to be more than $355,000, but
Right.
we did test that amount.
Now, that was what was that called, that money that was,
It was called a bridge advance.
advanced, okay. Does our contract or any state statutes prohibit this board from have done that?
I've seen advances made by state and federal governments on grants. It's not an unusual thing.
Okay.
So can you give
So-
me, I'm sorry.
And the other question is on that, now, they got the advance, and then the next month, they got $290-something thousand for the receipts they paid for with the advance. Is that right or not?
Actually, there were 3 small payments that were received in addition to the $355,000. I think there was, 58,000, 30,000, and 11,000. And those were, I believe, really related to the LifeSync contract, but were applied to the expenses that occurred by Continuum.
They were the remaining draws from the licensing contract.
Then there was, I don't believe there was any other payments in November, and then there were 2 payments made in December. And both of those, I also believe were advanced, treated as advances. I don't think that they related to actual expenditures. And then there was a January payment that related to December actual expenditures.
So if I can get back to you for just a second on the amounts of the billings and where we should apply those. I know you mentioned that the 44,711 was a one-time, not projectable. So are you saying that's where the 66,000 should be applied for the underbillings?
64, 65. If you net the two together, it's about 20,000 underbilling.
To their benefit, though.
To their benefit, yes.
So what was the total of the underbillings?
The total was 77,754. It's after we adjusted for items that were duplicates and some other items that did not appear to be business in nature.
Okay, so,
And that relates to the $3,928 of that finding. That was 1 month that was underbilled. But I guess to back up and answer your question, I said there was 2 reasons we didn't include those. The first one was that wasn't really the scope of our engagement. We were just testing what was on the draw schedules. The second is that if there were underbillings, we didn't know why they were underbilled, and we didn't feel that was part of our engagement to determine why they were underbilled. We thought maybe they were underbilled because they could have related to something else. We didn't know. So we didn't go down that road. We just did not include those, did not net those out against the question cost.
which I think we understand that, and have an appreciation for that. So at this point, there are $77,750 of underbillings that can be applied to the 44,711 if the board chooses to do so. And then what other areas would be appropriate to apply that to?
Well, the 64 that related to October, and that would be netted against 44,000 up there, so that's about a $20,000 underbilling. The third item down, the $3,928, was 1 month that we found that the actual overhead expenditures were less than the 15% that were applied. So if you were to take the net of the remainder of the 77,000 less the 64 is $12,823. It could apply against that $3,928. So you'd have roughly $9,000 underbilling for those 3 months that we tested.
Okay, so are you saying that the 44 number should be the 65 number that you, because when asked about the underbillings, you said 77,
In total,
754.
yes.
So if we're going back now, looking at this number, the 44, you're saying that is now 65,000 some.
Well, I'm saying that $64,930 of that 77 total related to October. And then, which related to that bridge billing and excessive expenses, it was during that same period. So I'm saying I would recommend that piece be broken out because it appears to be a one-time item. And it was of the 4 months we tested, October, the overhead, actual overhead was 40% versus the 15 that he applied. January was 10.8% versus the 15. August was 26.4%, and November was 15.5%. So I think the 40% was unusual, and that's why I would say that was that whole startup bridge advance was an unusual situation. So I would say take the 64,000 netted against the 44,000 up there, and then take the remaining 13,000 and net it against the 3,928, and come up and you come up with about 9,000 underbilling for the remainder of what we tested.
And that's through what month, Mike? Do you think that way?
Those were, January 2013, August 2013, and November 2013.
Okay, you know, I was talking about the October 355 to 410,000. Did you say a while ago that they didn't, we didn't give them any money in November?
I think those small payments, I think some of those may have occurred in November, but no large payments in
I'm
November.
talking about November 2012. Is that what you're talking about?
I can tell you exactly in just a minute.
Okay, because this sheet that I've got says $293,000 for November. And then December, $299,000.
I
Now,
think the
if you-
293 actually occurred in December, but it was for November.
Okay, but didn't you say we didn't give them any money in November, what was that? Or did I misinterpret that?
Two calls in December, one for November.
There was, 355 was paid on October 10th, 2012. There was 58,556 paid on October 10th, 2012. $30,081 paid on October 10th, 2012. $11,324 paid in November 15th, 2012. $293,797 paid on December 5th, 2012. And $299,911 paid on December 11th, 2012.
Okay. Well, this sheet I got in front of me says, it doesn't matter. Okay, there was 2 payments in December. Okay, well, let me ask you this question. The first payment in December of $293,000, I think it is, was that money given on the receipts that we got from Continued Labs in the previous month?
That
In
wasn't
October.
that wasn't one of the months we tested, so I can't tell you whether it was or wasn't.
See, I guess, and it's hard for me to try to explain this, I'm sure, that we give them an advance in October of $300-something thousand. Okay, they used that money to run the operation, they got the receipts, they turned those receipts in and got paid for those, got paid for it again in the first draw in December. So they got paid twice for those same receipts, is what I'm asking.
But,
Is that the case?
but I think what you're saying is there was no November payment. So the payment that they got in December paid the November expenses.
But they got 2 payments in December.
One for November and one for December.
That's why, if you look at our second finding, if you could go to page 33, that's why we make a recommendation that there be an overall reconciliation of the amounts were paid versus the amounts that were expended. Because there appeared to be advances, it appeared that the payments before January were not based on actual expenditures, that they were estimates. But we didn't test those 2 payments made in December, so I can't say that with certainty.
Regardless, they were draws.
They were draws.
Well, I guess I'm still on this thing here. Vanessa's telling me I'm wrong, and I may be. If we move, just for the sake of argument or discussion, if we move the first December payment in our mind over to November, which is like on this sheet here, can we do that? Can we do that?
Sure.
Okay, but I'm trying to understand this, Mike. So, let's just say that the first December payment was paid in November. Okay, where did we get the information to make that payment? We got it from the October receipts.
No. It was a draw request. It was an estimate. That's the point I've been trying to make, is that the bridge the bridge funding, the expenditure of the remaining draws from LifeSync, and October, November, and December were all estimated draws as per the contract. We did not move to actual reimbursement-based draws until January. That's the reason that there is some trying to settle the difference in treatment of these two areas of funding.
Just if you could go to the next slide, slide 34. Donald, this is why we made this recommendation, is that there was a payment made at the beginning of October. There was two payments made in December, so theoretically November and December, and then there was a payment in January that represented December actual expenditure. So that's why we made the recommendation here that there appears to be, we just took the last payment because we didn't test it, we weren't sure, but there appears to be a duplication in there. And that's why we recommended that there be a reconciliation of the whole amount of expenditures that were incurred versus what was paid out. And that's what this finding covers.
Yeah, looks to me like there was a duplication, that's what I'm trying to understand.
But didn't you just say that we had not made a November payment because of our review process and needing to approve that? So when we reviewed that in December and made that payment, it was retro for the November? So where we,
The first three payments were estimated.
conclusion in that there may have been a duplication just because you didn't look at it?
Well, the recommendation's there because the first three payments, as Bill said, appear to be estimates. And then, starting January, the draw requests are based on actual expenditures incurred in the previous month. So we're saying that reconciliation, we're recommending the reconciliation just to make sure the estimates, that there were actual expenditures that were correlated with the estimates, that there wasn't a total payment for those months.
And we're talking about January when we made the final payment.
That was the previous January.
Okay.
All right, can you clarify the process to do for the board, the reconciliation of those expenditures in totality?
What I had envisioned was that, Mr. Bond had his CPA prepare financial statements listing all the expenditures incurred between, if you want to go back to September, when it started, September, mid-September, or if you want to start October, either one at your discretion, through the end of the contract period, which would be June 2014. And then compare that to what you actually paid them, and then to see if there was more money expended on the project than what you paid. That would be what I would envision.
If you keep saying this, then it kind of bothers me, if I understand it right. That we're gonna look back and see if he spent more money on his project than what we did. Well, is this supposed to be 100% grant? That every time he spent, we're supposed to give it back to him, reimburse it back to him? That he's not supposed to have any skin in the game? That if this examination and all these problems with the examination comes up, and if we give him more money than what we had supposed to, according to our contract, but he spends more money, then we should just give that back to him?
I think it's just, this is just one way to reconcile or offset any question cost. So question costs are not disallowed costs, that's up for the board to debate. I think what Mike and Bill are trying to demonstrate is there were other costs paid above and beyond what they were given through the grant by the company that we may want to take into consideration against that. It doesn't mean that they shouldn't have had skin in the game. It means if we say, okay, we're gonna take this group of costs and say, we don't think this should be applied to the grant. He has other billings that he has paid for out of their funds. So then if he is going to pay for the question cost, do we want to give him credit for other areas? That's what we're discussing.
Well, because he didn't keep all the proper records, or whatever may be going on here. So we're gonna just say, forgive and forget, and say, we're just gonna let you, just give you all this money.
No, I think we're trying to have an accurate accounting for where all of the money expended in the grant and whether or not we feel like
Be nice.
we agree with those expenses. And Donald, I'm not sure where you're going with the be nice or what your comments are. This is a project that we have invested $7.25 million into. I think you would agree that we have an obligation to ensure that we understand where those funds were spent and that we agree they were spent for the purposes of furthering the grant. There were monies paid by the company over and above that also furthered the project.
Where I'm going, Madam Chairman, is for the citizens of Hardy County. It's their money that we're setting up here and dealing out to these people and everybody else. It's not private money, it's not your money, it's not my money, this is
I don't
citizens'
think
money.
anybody,
And they need to be, we need to look after the citizens.
Donald, I don't think
That's
anybody
our
on
job.
this board disagrees with you. But if you would take a less adversarial approach about having these discussions so that we could all better understand.
Well, I'm sorry for standing up for the people of Hardy County, I
No-
apologize.
Nobody is asking you, Donald, not to step up for the people of Hardy County. What we're asking you to do is understand that your position on this board is to foster economic development. At this point, we have a project that we've spent $7.25 million on, and it seems to me that your goal is to crucify the project instead of better understand how this project may benefit Hardy County. What do you think we're going to gain out of it?
You haven't read that, right?
I have read every word of that multiple times. Thank you.
Can I talk to Travis? Travis, could you please come to the microphone?